Hi, Hubert Johnson with Guardian Tax Law. Today I want to talk to you about SBA loans. What is an SBA loan? First of all, the Small Business Administration offers loans to businesses that are struggling due to natural disasters and other events. So when businesses have a natural disaster, a fire, hurricane, etc., the government comes in and offers some loans to help them get back in their feet and help keep those businesses going, to employ people and keep jobs going. During COVID-19, because the economy was shut down, the government opened the doors wide open and lowered their standards so a lot more people could get these loans. And that was done on purpose because they didn't want small businesses to get hammered and forced into closure due to the lockdowns and everything else surrounding COVID-19 and all the disruptions in the economy. Unfortunately, we're out a couple of years now, about 3 years from COVID, and businesses are not making it. And that's part of the normal economy. Businesses shut down, businesses reopen, but a lot of businesses that got COVID loans are now shutting down, especially EIDL loans. When a business has to shut down and the owners personally guaranteed these loans, what options do they have? First of all, you can file for bankruptcy if you qualify. But if you want to avoid bankruptcy, there are some options in working with the government. First of all, they do work with people that need lower payments. So if your loan has not defaulted, you can go to the SBA and say, look, I need 6 months of no payments, or I need 6 months of at least 10% of the normal loan payments. So if your normal loan is $1,000 a month, you can get by with 6 to 12 months of $100 a month. They want you to succeed. They don't want to see these loans default. But if the business closes down and you default on the loan because you just don't have the money, that's when other options become available. So if you can keep the business from defaulting, it's always best to stay on these installment agreements. Like I said, the terms are really great. They give you up to 30 years to pay these loans back, and the interest rate was really low when these loans were first offered. The interest rate is much higher now. And if you have to negotiate an installment agreement based on today's rates, it's going to be much higher. You can do what's called a partial pay installment agreement, where you pay on your ability to pay, not on the debt owed. So whereas your monthly payments were $1,000 before, if we can show that you can only afford to pay $100, not for 6 to 12 months, but moving forward, that's all they can charge you once we go through and present your financial information to them. They also have an offer and compromise program where you can settle the debt for much less than the total owed. So again, it depends on your financial situation. And the caveat here is that when you do have a successful offer with the SBA, they will issue a 1099 that goes to the IRS, and they will report that cancellation of debt as income. But again, we will help with the IRS as well. If you or your business are struggling or has closed down, call us for a free consultation to find out what your rights and options are in addressing this very real issue that facing business owners today. Again, Hubert Johnson with Guardian Tax Law.